All right, guys, back again. We got another episode of Consumed, and for 2 days in a row, we're going to be covering an earnings report. So if you guys didn't watch my episode yesterday on bodybuilding.com, make sure you guys do stop and watch that after this. Vitamin Shoppe did report earnings this morning for 2018 quarter two. And they showed a top-line revenue of $293 million. That was down 1% quarter over quarter, also down 1% year over year. One of the the most important metrics that retail businesses report is same-store comps. And Vitamin Shoppe did see a decline 1% of same-store comps. They also kind of went on a little bit later in their call or in their report talking about some guidance for the rest of the year. And they gave themselves a little bit more leeway. They said they were going to be down mid to low negative single-digit comps for the rest of the year. And I'm assuming that there's going to be some bumps in restructuring plan with the new CEO that's coming in. So they wanted to make sure they gave themselves a little bit more leeway in terms of guidance for the investment community. In terms of store counts, they did open one store this quarter, but they did close two. Now, getting into operating income, it can get a little bit confusing in terms of the way that they reported their numbers. I believe they said they had kind of like a mid single digit operating profit, and then comparative to like year over year, they showed like a huge $150 million loss. And they're kind of utilizing that in kind of a shock value approach. But if you guys take a look a little bit more at the numbers, last year in 2017 when they did show that big loss, it was mostly due to a goodwill like write down impairment charge. If you guys are not too kind of familiar with like accounting of goodwill and all that, I think about 15 years ago, the general accepted accounting principles changed a little bit in terms of how goodwill was amortized. I think they changed it from like having to do a straight line over 40 years to a straight line over a much less period. I can't remember exactly how much that was, but they do give the opportunity for public companies to change that with like an impairment charge if something fundamentally has changed in the business. Most of the time it's utilized in when companies do buy other companies and they bought it for a much higher price than what the value is maybe 10 or 15 years later because they made kind of bad decisions. But overall, like the impairment goodwill kind of charge is usually to kind of make up for bad management decisions that were made 5, 10, 15 years ago. So I'm assuming that the Vitamin Shoppe is utilizing this mostly around the retail business and the value of their retail business. A lot of investments that were made 5 to 10 years ago in terms of maybe retail square footage or just kind of overinvestment in the retail business obviously has changed significantly with digital sales. So the Vitamin Shoppe is utilizing that kind of accounting principle to adjust a little bit of their thing. So if we normalize those numbers, and what I mean by normalize is like you kind of take away, exclude those things. And they also kind of took a goodwill from this quarter of this year. The normalized operating income for this quarter would be $12 million, and that's comparative to $16 million year over year. So still a declining kind of like profitability of the business in terms of like operating income. So though it looks a lot crazier in terms of the way that they reported on their kind of their press release, I just wanted to make sure I made those notes because I believe that is a more truer number, the one that I kind of compared it to, the 12 to the 16. All right, guys, so to unpack the numbers a little bit more, there's a few different line items that I thought were important to note. One, obviously big one, was gross margins. They did see an increase in gross margins, but that was only because they decided to kind of exclude a $3.5 million like merchandising assortment optimization expense. Though that number, it seems pretty big, I think it's important to kind of like ongoing business. If you guys watched my previous video when they announced their new CEO, one of the big points that I kind of mentioned was their merchandising approach. And since then, they've announced a new program called Launchpad. That's going to help them incubate some smaller brands, kind of take it from a regional or a localized approach, and kind of help those brands get more national footprint. And because they're doing that, they have to look at kind of the merchandising assortment right now and make decisions on who to cut, who to keep, and different things like that. If you guys have followed maybe on the sports nutrition side of things, you guys saw Redcon One, a very fast growing brand, is going to be nationwide into Vitamin Shoppes. Also, I believe Performex is joining the Vitamin Shoppe. Brands with some strong retail traction will be added to the assortment. All right, so just one other line item that I kind of wanted to mention, and just because it's kind of a big increase over the previous year, and that's just kind of their selling, general, and administrative costs. The Vitamin Shoppe was highlighting a few of them. One, just kind of increased cost of their retail footprint, operating their stores, and then saw an increase in like the labor costs both from like a salary or a pay perspective, and then also from like a healthcare perspective. So in any retail environment, obviously you're looking at those costs and making sure that that they're not increasing at too high of a rate. Healthcare is one of those macro trends that doesn't seem to be stopping anytime soon. And then from some of like the labor, like the salary part of things, obviously things like implementing omni-channel and such, that could decrease their labor costs over time. On the flip side, Vitamin Shoppe is looking to utilize some added perks like dietitians and things like that. So those obviously would have an increase in some of their labor costs. So we'll kind of have to pay attention to that in the future. And then kind of like the last line item was just around like capital expenditures. With the new tax bill that got signed, one of the big things from a corporate perspective was the hope, was that companies would increase their capital expenditures. And the Vitamin Shoppe did spend about $9 million this quarter. They're saying most of that is getting spent on digital and IT initiatives, which I agree wholeheartedly. Spend as much money as you can from a capital expenditure perspective to kind of catch up to what's going on from the digital perspective. They did say over the whole year they're going to spend about $30 million, and that include a couple store openings. This is kind of down from the previous year, but I think the previous year they had more store openings and those cost a little bit more. So I would root on the Vitamin Shoppe to continue to overspend on digital. Since we're talking about kind of like digital expenditures, I wanted to make sure I highlighted the Vitamin Shoppe's kind of progress with their digital expansion. So this quarter they saw a 37% increase year over year. That is a number that should not be understated. They don't report kind of what make up their businesses in terms of online or brick and mortar. I would assume because they don't break it out, it's not that big of a proportion yet. But anytime you're hitting numbers like 37% year over year growth, and I think from a 6-month perspective, it's somewhere around 30% for the first 6 months comparative to the first 6 months of last year. Those are big numbers, and they're obviously doing really well, pushing people to digital, pushing people towards their subscription model. And that's just one of those things that they're going to have to continue to overinvest in to make sure that those numbers continue, because anybody that's kind of paying attention to the retail kind of world obviously knows that foot traffic has been down, and that's obvious from Vitamin Shoppe's same store comps. And they need to make sure that they are gaining a place in kind of the digital ecosystem in terms of e-commerce, and I think that the Vitamin Shoppe is doing an extremely good job at that. They have to continue to do a great job, because I think it's one of those areas where it doesn't really matter your history around it. It's kind of what have you done for me lately. And then one other positive thing to highlight was they actually from kind of their positive operations this quarter, the financial team felt so confident that they kind of bought back $30 million of convertible debt that was not due until 2020. So obviously trying to clean up their balance sheet. If you guys saw an infographic that was kind of flowing around the internet recently, they were talking about maybe 15 businesses, retail businesses, that were going to go bankrupt in the next year. And Vitamin Shoppe was on that list. And though I made a comment when I shared it saying, obviously I didn't think that was going to happen, I think it's important for us to kind of make note that they are paying down debt earlier than they need to. That's kind of much different than from their main competitor, GNC, which has a large amount of debt on their balance sheets right now, and they actually are still kind of going through their raise with Harbin Pharmaceutical to kind of get some of that cleaned up right now. So the Vitamin Shoppe is seeing some increased cash flows to the point where their finance team feels so confident to pay down some debt a little bit early. So to kind of finish this up, is just kind of from an outlook perspective. I definitely think this quarter showed the Vitamin Shoppe had some really positive things going on for them, especially from the digital perspective. When you're growing, in the 30% year over year, you're obviously making some big strides in a lot of your strategic initiatives to push people towards digital sales. One of the things that were dragging the Vitamin Shoppe down for the last so many quarters was they had kind of a lame duck CEO while they were kind of searching for their turnaround executive, and bringing in that new CEO. And like I said before, I did make a video on that with Sharon. I believe Leet is how you pronounce her name. So guys, make sure you guys look at that. Obviously I made some comments there, but I think having a new CEO in place, I think she starts later this month. I definitely think that's going to be both a positive to like the culture, but also just from a standpoint of like being able to shore up a lot of plans. With not having kind of your main executive in the office, a lot of times things maybe are kind of in limbo, and with Sharon kind of jumping on, I'm sure she's going to have a lot of things that she's going to kind of have to sign off on early on, so she can kind of get this turnaround effort moving faster than what it's doing right now. So the further talk about like kind of the outlook, I mean, the points that the Vitamin Shoppe made were, I think, things that are like macro-wise from the retailing environment of nutritional supplements, and they're kind of talking about, decreasing margins. They think that's going to kind of continue, even though they did have like kind of a positive margin impact this quarter. They're saying again, like same-store comps are going to be down, and I think there's going to be an increased competition. Food, drug, mass, convenience channels increase their healthier for you assortments. If you guys have stepped into any of those, storefronts in the last couple of months, you could probably see they've doubled or tripled the size of their shelves or cooler space for functional foods, functional beverages, sometimes supplements. It just kind of doesn't matter. So no longer is like a Vitamin Shoppe or a GNC the kind of the only place you can go to pick up some of those things. You can now kind of shop at a lot of different places. So the overall increase in competition is going to be something that this kind of category of specialty retail is going to have to continue to kind of push against. But it seems from this quarter that the Vitamin Shoppe is making a lot of changes in their turnaround or strategic kind of plans, and we'll kind of continue to pay attention. If you guys did like this content, make sure you guys give me a thumbs up. That helps me understand what you guys like, what you guys don't like. And if you guys did have any questions that were kind of around this topic, make sure you guys do comment below. And so since I don't charge for this content, and obviously you guys can utilize this in your business however you would like, all I ask from you guys is if you guys did get some value out of this, make sure you guys are sharing this with a friend or a colleague or anything to help me grow this community. That would be much appreciated. And hit the subscribe button, and I'll see you guys on the next one.